What's up YouTube, it's Sankey and I make videos on the stock market. Guys, I've got a jam-packed one for you today, but before I get cracking, please check out that link down below. That's trading 2 on 2. Go and grab yourself a free share of stock. Now this week I highlighted one of our MVP penny stocks, that was Gevo. Gevo make sustainable aviation fuel and they had a fantastic week of trading. They popped up almost 30% on Thursday. Now I've already given you guys a strategy for Gevo this coming week, but I was inspired by their performance, so I thought I'd give you guys some penny stocks in that renewable energy space, because going into 2021 a lot of these could perform very well. You know, the market is really gearing up for that switch to renewable energy, and we also must remember that Biden has his $2 trillion green energy plan that's going to roll out as soon as he takes White House next year. So we want to load up on some of these penny stocks because they could be good for our portfolio. Now do remember, penny stocks carry a lot of risk, so do correctly diversify your portfolios with some more established businesses which are profitable and growing year after year. And I'll give you guys a lot of those plays over on this channel. Now those over at the Patreon will know that penny stocks only really account for less than 5% of my entire portfolio. Now without further ado, let's jump into the first play. First up, we have American Battery Metals, that's ticker symbol ABML, currently standing at $1.18. This is a fantastic business, right? Firstly, they aim to extract battery metals from its primary sources, but more importantly, they are a lithium-ion battery recycler, right? So they take end-of-life lithium-ion batteries and extract high-grade metals that are used in the batteries, right? So we're talking cobalt, we're talking nickel, aluminium, copper, as well as lithium. So this is an interesting business. So the big news they gave investors not too long ago is that they've gone ahead and purchased the land for their recycling plant. They've also secured the water rights and they've hired a construction company. Now they have massive plans for this land and their recycling business, right? To put it into perspective, they aim to do about 20,000 tons of recycling each and every year, and this is going to equate to revenues of about 200 million, right? And they aim to up that and ramp that in the following years to 200,000 tons per year, which is going to equate to 2 billion in revenue. So this is a business with massive plans, right? And we know they're going to benefit the EV sector, right? Because there's going to be a lot of demand for recycled batteries within the EV space going into 2021 and beyond. Now they aim to give investors an update on where they're at with that construction of the recycling plant early 2021, and this could act as a massive catalyst for that share price. One of the key things to look out for when investing in a business is who they've hired and their general management team, because ultimately this is going to be the group of people who are going to lead the business to success. Now they've recently hired a former Tesla manager and he's going to lead the procurement of the recycling plant. And this is good news because he's going to have the connections and the know-how to get the job done. This is exactly what we're going to see as potential investors in the company. Now, American Battery Metals is still pre-revenue, but they have a market cap of just over $500 million. Now, with a forecasted projected revenue of around 200 million per year once they get the recycling plant up and running, gives them a price to sales ratio of 2 times. Now, this is relatively cheap. So I do see them running up to $1 billion company next year off the back of good news on progress of the construction of the recycling plant, which is going to give them a share price of over $2. So I think it's a fantastic opportunity. Remember, it does carry risk. If there's any delays in there in the construction of the recycling plant, you could see quite a heavy drop in that share price because they're pre-revenue. So in terms of what I'm doing, I'm going to buy 100 shares of American Battery Metals, and then I'm going to wait and see for further positive news and then buy in again. Now, if they can get to that forecasted 200,000 tons of recycling each and every year, giving them an annual revenue of $2 billion, this is going to be a business with multiple billions for its market cap, and that share price is going to be a lot higher than what it is right now. So there's a lot of potential with American Battery Metals, so I'm quite excited by this one going into the future. Next up, we have FTEK, that's ticker symbol FTEK, currently standing at $4.80. Now this is another interesting business with quite a sophisticated product, right? What they do is they install their technology, their product at their clients' bases, and their clients consist of energy companies and water companies. And what their products do is they aim to curb pollution, but also aid in water treatment as well. Now the great thing about this business is their financials. So if we quickly jump into their Q3, revenues up 30% to 8 million. They have high margins of about 40%. net income positive about 2 million, and they've got good cash of about 12 million. But not only this, they're set to do very well in the next quarter, right? Given the stream of business that they have. So on the air pollution side of their business, they're waiting for a decision on multiple projects. And if they get this is going to increase their order backlog to 10 million to 15 million for 2021. And it's going to look very good for their financials next year. On the chemical side of the business, there's about 1.5 million to be generated next year from installations that they've done at one of their clients' bases. Now, with projected 2020 revenues of $25 million and a market cap of $100 million, this gives them a price to sales of just over 4 times, which again, I think you could see being driven up into next year. So again, I wouldn't surprise me if you see this company at $8 in 2021. Next up, we have Orbital Energy, ticker symbol OEG, currently standing at $1.48. This is a fantastic business, and similar to what we saw with Alpine 4 Technologies, we know they're an acquisition company. They go out and acquire different businesses. Orbital Energy are an acquisition company for the renewable energy space. So they should be at the forefront of innovation, acquiring fast growth businesses, right? Now they have a gas business, they have a power business, and they have a solar business as well. So they are very diversified within that renewable energy space. Now they have very good financials. So just quickly going through them, their revenue, almost $14 million, up 75% versus Q2. So they're not income positive. They recorded a loss of $3.2 million, but this shrank significantly from Q2 when they recorded a loss of $9.3 million. So they're moving in the right direction. And the great thing is that management think that they can be cash flow and EBITDA positive by 2021. And this could act as a massive catalyst for that share price if we get that announcement that they've hit profitability. Another good thing about this business is that they have a healthy backlog of about $52 million, and this grew from the quarter before of $46 million. So it shows that they're in demand. All they need to do is work through this backlog and they should be on their path to profitability. Now, with a market cap of 45 million and projected sales of 35 million, this gives them a price to sales of just over 1 times, and this makes them the cheapest of all 3 plays that I've shown you guys. And this is a good thing because it acts as a good entry point. And again, there's a good couple of catalysts. If, like I said, they hit profitability, if we get news that they're acquiring, different businesses in their gas business, their power business, and their solar business, we could see that share price creep up. And there's a lot of room for growth if their market cap is only $45 million. So in terms of what I'm going to be doing, I'm going to be buying 200 shares of Orbital on Monday. Alright guys, so it's question of the daytime. This question comes from Robert. The question is, what about the influence of capital gains tax for US residents? Will they sell off shares to avoid those taxes? So thank you very much for sending in this question. Guys, do leave your questions, comments down below. I'm reading all of them. Now this is a great question because as we approach the end of the year, what tends to happen sometimes is you might see a dip in the stock market late December. This is called the January effect. And what happens is a lot of fund managers, what they'll do is they'll sell off underperforming stocks and write this off against their taxes in the following year. Now this is nothing to worry about or concern yourself with if you do see a dip in some of your portfolios as a result, because what will happen is the market will just correct itself if you're holding quality assets. Now if you guys want me to do any other tax videos, because there are certain tax implications if you're holding a stock for less than a year or over a year, and different tax applied to dividends and growth stocks, do let me know and I'll cover those. So guys, thank you very much for tuning in today. As always, do hit a like on the video. It really helps the channel out. Do hit that subscribe button if you're new. I post each and every day. And as I always say to you guys, do check into the channel each and every day. The stock market is rapidly moving and you never want to miss a beat. So I'll catch you guys on the next one.